Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Setup Sunday here in the last Sunday in February. Let's take a look at the week ahead. Some things I'm focused on this week. A lot is happening on the legacy side. There's something for everybody. We got jobs. We got Powell. King J Daddy Dog is going to be out there on the podium slinging his rhetoric. Everyone's going to be listening for anything remotely related to any sort of cuts in March. For the people who think we don't need cuts, I hear you, I'm with you, but it comes down to whether or not Powell wants to remain as restrictive on the real rate side as things are starting to get with inflation by many measures now on a year-over-year basis at 2% or lower in some measures. We've got a lot of the Mag 7 reporting earnings, Facebook, Alphabet, a few others, Apple, Visa, and then we've got non-farm payrolls at the end of the week. And oh, by the way, we also have a quarterly refunding announcement at the end of the month on Wednesday, which is important because it will reveal the mix of long versus short debt that we're issuing. And yields are likely to respond to that. Risk assets likely to respond to that. DXY likely to respond to whatever Powell says, whether it's no cuts or cuts or anything in between. So a lot of newsy type things this week on legacy, just to be aware of if you are trading. If you're 100x long on Wednesday, I wish you luck. Anything could happen. So keep that in mind. On the crypto side, it's kind of simpler in some regards, not too much happening. We are entering the point of GBTC irrelevancy here as what looks to be declining selling coming out of that product over the past week. We'll see what this week brings, but last week's selling is a good omen that it is mostly done as far as the forced sellers. That's who's selling here. It's FTX, it's probably Grayscale themselves or DCG. It's anybody who is involved in the ARB trade. They aren't forced sellers, but if it were me, which I was in that trade myself, there's no reason to hold GBTC beyond ETF conversion. If you want a Bitcoin product, you can go somewhere else for much cheaper. We do have halving in less than 80 days or thereabouts. And that may just be enough. I see a lot of people in different ways kind of expecting pain, expecting a down move. It's happened in and around halving, the past two halvings. Obviously anything is possible, but I wouldn't let perfect be an enemy of the good. I wouldn't sit on the sidelines expecting something to happen and then have price run away from you. Really, the most important thing here is just have a plan for yourself when you think you're wrong. If you're a max bear here, thinking we gotta go to 30, right? If that's you, just say to yourself, okay, this is where I'm going to be wrong if price goes higher. Do that for me. Do that for you. Okay. On ETH, we've got some selling from Celsius still, and we've got Gox coins. I don't have that on the list. All this stuff at this point, time is on our side. The longer we hold in the 40s with more supply unlocking into having minor selling, it's all just whatever at this point. It doesn't really matter. We'll have a news event on the Gox coins getting unlocked. Okay. The doomers are going to love that, but it's not going to matter. It's over. Okay. We've got ETFs. We've got a bunch of people who don't have Bitcoin with a lot of reasons to buy Bitcoin. That's all it comes down to. So we are positioned, in my opinion, for the best pre-post halving reaction in the market we've seen, just based on who's able to buy this stuff in a serious way. I don't think that's necessarily consensus either. I think people, again, still think things are more bearish than they may otherwise be. On the technical side, I'll talk about, we have a potentially failed edge-to-edge bearish on the daily cloud, maybe an inverted head and shoulders, maybe some falling wedge stuff on alts, and generally just kind of chopping around. If we look at the CME probabilities, this month's less important than March, and there will be a lot of Fed speak in between the end of this month and March. So even if Powell says, we don't think we're cutting next meeting, that may change between now and next meeting. I think probabilities are about where you'd expect. It's a coin flip as far as March cuts or not, and that will change depending on what Powell comes out and says in the meeting this week. But the big thing is, look, liquidity is on our side here. It's either we're pulling money out of the ecosystem globally or we're putting money into the ecosystem. This has followed a cyclical pattern. Historically, we are coming off of a nadir at the bottom there, and we are starting to establish tailwinds here on the 4-year cycle, which is obviously lines up perfectly with halving. This is, of course, from cross-border capital. No guarantees, no promises, but it's going to be hard for the bears if rates come down, liquidity is fine or rising, recessionary concerns are continued to be pushed off, right? That's definitely going to help risk assets. If we look at Bitcoin relative to halving historically now versus every other halving, we are right on track for what you'd expect. Most of the action happens after halving, and it happens much after halving, really. It happens 25 weeks plus. We can easily just slowly grind up, but most of the action happens pretty deep after halving. 2012 being an exception here, but you can see percentage-wise, things start to creep up, and you can be a believer or not in halving. It doesn't really matter to me. I mean, I know what I see and I know what I've seen, and we'll see if we see it again. And it's really that simple, but we're lined up for the same type of behaviors we've seen historically in and around halving. As far as the ETFs are concerned, if we look at the total Bitcoin held in the ETFs, we are still down from all-time highs if you include Grayscale in that calculation based on BTC held, which is really all I care about. I don't really care about the USD values. All I care about is total BTC locked. If we look at the non-GBTC products, they continue to act like hungry hippos, specifically FBTC and IBIT. There was talk this week of a Schwab ETF potentially coming on the Bitcoin side. The more the merrier. It's a big tent. Jump on in. Love to see it. They may come in with a completely lowball fee as well. So that's certainly not bearish from any regard. If we look at the USD flows, you can see the Grayscale flows declining, the outflows declining over the past week. And we squeaked out a net positive at the end of the week. And look, all I care about is Grayscale. That's it. The rest of it will take care of itself. I said this several weeks ago. It's really the only thing worth paying attention to, because once those outflows stop, the inflows will take care of themselves. And even if you are sort of assuming that all of these outflows have basically been inflows and, this has been a failure and there's no volume or whatever, right? It doesn't even matter. I'm telling you, I guarantee to you, once we start pushing highs, once we start crushing all-time highs, you'll be surprised what kind of flows we're going to see on a daily basis. Again, this is kind of a day behind here, but net flows and GBTC starting to take care of itself. So from the ETF front, we are looking good, and it is harder to be bearish when GBTC outflows, that's the dominant thing in the market right now, the dominant narrative. Not only does that hold the buyers back a little bit because they're just waiting to see like what's going to happen here, but obviously it pushes price lower, right? Looking at the ultra long-term view, many people's favorite chart, as they say, power law corridor here. We look totally fine, exactly where you'd expect us to be pre-halving. And it's just hard to be bearish when you're looking at charts like this historically. We are positioned extremely well based on the 20-week, based on the 200-week. Even if we retest all that and lower, it's still not a big deal at the end of the day. We've done so before pre-halving. Again, I'm not going to be all in cash just sort of waiting for that move lower, because to me, this is good enough. Okay. It's good enough. The 8-hour started to get interesting when we had a buyer step in. Some people rumored that it was Justin Sun and some TUSD shenanigans. We'll see what happens on open on Monday, but you're starting to develop potentially an inverted head and shoulders. Potentially this may morph into an Adam and Eve throughout February. I mean, we could spend all of February making a huge U on this. From a trading leverage perspective, I would certainly prefer something obvious like a chart pattern, like a reset of the daily cloud. I'll take any of that stuff. A breakout of 43.3, also acceptable for me as a long trade. I'm kind of expecting, some struggling this week into Wednesday. And depending on how the FOMC meeting goes, we may continue to make a right shoulder. We may push above 43.3. I don't know, right? It's an if this, then that. It's kind of just based on what happens. But it's definitely something to watch throughout the week. Also declining volume. Throughout all of this, which again just says the market is waiting for a reason to continue buying above 43.3. On the daily cloud, still don't have a bearish DK cross, which is a bit odd. I'll give you that. We dipped into the cloud, reversed, again, odd. We don't typically sort of get that deep into the daily cloud like that and then stop. Just all the more reason to kind of do nothing here and wait until the churn of the ETFs is over and we start to see mainly inflows, which is what I'm expecting the deeper we get throughout the year. So I'd certainly call this at the moment a failed bearish move lower. Again, I think the consensus was certainly expecting 35, including myself. That's looked like where we were headed, certainly. And the daily cloud at this point, not super helpful because, again, you're probably going to get a bearish TK cross. So the next trade would be taking a long on the bullish TK cross. So that may happen. I just think it's going to happen kind of too slow to make sense, but we'll see what happens here. Just again, it's a massive wait and see. I think Q2 is going to be where those trades you don't want to miss. If you just sit out the rest of the quarter, I don't think you're going to miss much, at least at the moment. But so far so good on the daily cloud. On the alligator fractal, your stop loss on a short is again 43.3. No surprise there. Alligator trying to flip back bullish. So, as bearish as I certainly was when we broke into the cloud, as the market changes, things change, right? And the 8-hour, which is where the speed of the market kind of has been, again, telling you that same level, 43.3, as far as anything above that, potentially go time for higher. If we look at the measured move, it's right back to the local high, right? So there's a million things that could happen between the current price and Friday. And if we're able to break 43.3, I certainly like higher on the week, but that's really dependent on Wednesday, honestly. We actually closed the weekly green. We're still sort of hovering at the edge of the weekly cloud. No real trade here because, again, the edge-to-edge trade has happened. I know many people took that trade successfully. The next step is just waiting. It's just waiting for the cloud to flip bullish. And because of how the cloud looks here, this is going to take us into Q4 easily. So again, be patient because we've got halving in April. 25 weeks after halving is typically when we've seen bullishness take off. And I think that would take us to about Q4. So chopping around throughout this weekly cloud at honestly any price is fair game at this point. It's just, you got to have patience here. Something else real quick on Bitcoin, the RSI is also attempting to break out a little bit here. So, I think short term, there's probably a trade here. Medium term, I think it's chop. And longer term, we'll see at 6 figures because, that's just where we look like we're headed. Some people talking about the monthly close. I don't really care. It's not a candle that I'm going to bet the farm on here. It's really the February monthly close that's going to be more important. That sort of determines continuation or reversal. I mean, we had a similar candle in early 2023. You can call it a spinning top, a doji, whatever. Generally doesn't have any bias one way or the other, but coming off of a bullish move like this, it certainly represents buyers and sellers coming to an equilibrium and a likelihood of reversal. So it's something to watch throughout February, but it doesn't scream anything. It's not particularly bullish, certainly, but not super bearish either. As the 2x ETF BitX is getting more trading history here, I think this is also something to watch, especially for a lot of people who I know are trading on the legacy side more than even the crypto native side now. If this is able to break the 4-hour cloud, this is fully resetting. Again, this is another great trade that I'll be looking for this week. If we can reset this in a bullish fashion. So currently everything's sort of leaning bearish. We're not yet below the cloud, but something to watch for through the week would be similar to the 28K break on spot, where break above a bearish cloud, bullish TK cross, all that jazz. So definitely something to put on the radar this week on the 4-hour. ETH, not much going on. Alts do best after halving. ETH is an alt, and we're not after halving. So I don't think there's much to do or say here. Anything below 2100 and things might get ugly, but I don't think there's a trade or a setup left at the moment on ETH. It's just, again, a massive waiting game. ETH does better in the first half of the year, statistically, historically. So it has a little bit of time, but I don't see anything here in the moment that's even worth thinking about whatsoever. Sol, on the other hand, does have potentially a breakout on its hands on the daily cloud. This attempted to break down, didn't. Has a bit of a falling wedge. Again, RSI kind of coming off of this, I always screw it up, convex concave, weakening RSI. And if it's able to gain steam and momentum again, along with, a bullish breakout on the cloud, yeah, this could keep going. Certainly. Definitely something to watch throughout the week. Definitely have to consider the FTX hedging or whatever the heck they're doing still, whether that's Galaxy or whoever else. That's going to be a factor here. But this chart doesn't look terrible. I'll give you that. It's just, not the best setup yet because everything hasn't reset. So for me, I'm always looking for the comfort of the cloud flipping back and forth, back and forth. The cloud sort of stayed neutral the whole time. You have a chart pattern on your side. So what you don't want throughout the week is anything that fails to continue at 130 because then you're going to have a double top. And that is almost certainly going to break that 87 level or whatever this go around. AVAX, very similar. Again, not quite resetting. It had a bearish head and shoulders that broke down, hit the target, into a falling wedge, RSI curling up. So again, everything's sort of kind of retraced enough to the point where, yeah, maybe this does have a shot at continuation here. It's just very much a wait and see. And then there's something like Link, which is just ultra mega turbo chop. I mean, the TK cross has reset here and is likely going to reset a couple more times by the looks of it. I don't think there's a high conviction trade here until higher highs. I think all of this is just no trade chop zone, very similar and reminiscent to the 5 to 7 level. If you're confident this goes higher, what do you really care that it's shopping around in the range? You're just accumulating. I don't think I'm quite there yet on the chart, but I could see that making sense based on the broader market being bullish. Just not really a high conviction setup here at the moment. Then that brings us to DXY, which is problematic because, this looks like the 8-hour Bitcoin chart, right? It's got head and shoulders, inverted head and shoulders, potentially broader, had a mini inverted head and shoulders. So there's lots of bottoming type behaviors here in the price. Cloud certainly favors the reversal, but again, it depends on what Powell says on Wednesday. That will move DXY one way or the other definitively, and risk markets likely to go in the opposite direction. So I really don't think too much happens broadly until Wednesday. Oil, as we've got this new geopolitical strife going on, oil was already curling up towards the tail end of last week. Now we have this attack in Syria, Jordan, wherever it was, that seems to be a sign of escalation, calls for war. That's not going to be good for anybody. And oil looks like it wants to curl higher. Anything past 83, and I'd get nervous that this is a true blue bullish reversal. But anything under that, and I think this possibility of a broader head and shoulders type move is certainly possible. And I can't imagine risk markets are going to like talks of war and escalation. So that's something to watch for this week. Then you've got the legacy markets, which continue to just blaze on forward to new all-time highs. S&P moving higher here on take your pick, soup du jour, reversal, continuation pattern, whatever. Looks fine for more. Is it overheated? Sure. Has it been overheated for a while? Sure. Is there a ton of money on the sidelines? Yeah, there is. So look, is it a wall of worry? Is it, the bears are just doubling down every week. The bears give more bearish. I'm just astonished. The 3.3 GDP print was bearish because we paid for it in debt. Okay, well, we better get something for all the debt. Anyway, this looks okay until it doesn't, right? So technicals want this higher. Same thing with the Qs. Qs looks like they want to go higher. Obviously not a great candle last week, but I think the earnings on the Mag 7 are going to tip this one way or the other regardless. But it looks fine overall, in the stratosphere as far as needing a pullback, but looks okay. Then you've got some other random charts like Carvana, like, look, if rates come down, I do think this plays out on Carvana. I think this goes higher. It has no business existing. Okay. The company, it's a shambles joke of a company. PayPal's another one, mega falling wedge on that. Just, things to watch and or trade. Robinhood's another one. If rates come down, if liquidity is back on the table, if the IPO window opens up, if, you can see the steps where maybe retail starts trading again, retail feels comfortable punting on some IPOs or whatever, right? Technicals continue to look okay for this. This is where things happen. I know I've talked about Robinhood for weeks, but eventually this should break up. It looks like it wants to. It's just going to take time. Airbnb, I saw somebody talk about this last week. Stereotypical inverted head and shoulders here. So I think there's plenty of places to punt around if you don't like crypto here, if you're just waiting. What you don't want to do is get liquidated on some nonsense pre-halving. Okay. Just do yourself a favor and try not to do that. And regarding the IPO stuff, we've got Reddit talking about an IPO finally, and Circle. So that stuff's coming. Looks like the IPO people are ready. Liquidity's ready. Looks like JPOW's probably going to start cutting this year. Having ETFs, everything's turning on Milhouse, as they say. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.